Let's move to stocks this morning though. So that was a bit of a political detour we took, but this is something that the street will watch. Let's talk about stocks this morning. Swiggy, first on my list, a thumbs down for their third quarter. Their net losses have widened. They have missed estimates. Revenues are up nearly 11% at 3,993 crores, but the estimate was 4,019 crores. The EBITDA loss that they have clocked is about 726 crores versus 554 crores last time. The loss estimate loss was 535 crores. So the street was expecting losses to narrow. Losses have widened. They've seen a net loss of 799 crores. The estimate was 620 crores. So same on both segments. In terms of segment-wise performance, revenues for food delivery were up 3.8%. GOV, which is something that is very closely watched for this category of companies, Swiggy and Zomato, gross order value was 3.4% Q-on-Q increase. Bolt now contributes to 9% of total revenue. I thought that was fantastic in just such a short period of time. Quick commerce revenue is up about 18%. Gross order value growth in quick commerce was 15.5%. Average order value rose 7% Q-on-Q. They've maintained guidance of doubling dark stores and raising dark store size by March 2025. But they have underperformed as compared to Zomato's 27% growth Q-on-Q. Going out revenues have also grown about 12.5%. Their supply chain and distribution revenues up 16.5%. Other things to just look at very quickly. Instamart's adjusted EBITDA margins fell 420 basis point Q-on-Q. Their dark store additions have accelerated, hurting profitability. So that may be taken into account by the street, because if you have to compete in this space, you have to add more dark stores. I'm just going to read out one or two notes on Swiggy. UBS has maintained a buy, by the way, at 510. They're saying better food delivery, but quick commerce underperforms peers. So that's key, because it's all become about quick commerce right now and delivering everything in 10 minutes. Yesterday, Zepto says it will deliver test drives for Skoda cars in 10 minutes. So it's going to the next level. They say competition in Q-commerce space is intense and margin pressure will continue. Macquarie, meanwhile, has maintained an underperform with a target price of 325. So that's a bit of a pain point. They say that in Q3, quick commerce economics have meaningfully been challenged, and they have reported a wider than expected headline net loss dragged by Instamart. In food delivery, they see a clearer path to achieve the company's margin guidance. So tough one for Swiggy over there. Sagility India is the next one on my list. It's a thumbs up on Sagility, and we're going to be speaking to the company in a bit, so stay tuned for that as well. The revenue is up 15.3% at 1,453 crores, a tad below estimates, but definitely a bump up. EBITDA up nearly 51% at 392 crores. This is a beat on estimates at 325 crores. Margins at 27% versus 20.6%. Big bump up in margins. The estimate was 21.8%. Net profits at 217 crores versus 70.5 crores. So a big jump there as well. In constant currency growth, revenue was up 15.3% year on year, 9% quarter on quarter. They have talked about their recent acquisitions. Broadpath, this has strengthened the position among top 10 largest health plans in the US. So Sagility is the other one to watch out for. Cummins is the third. Cummins India, thumbs up on the results. Revenue PAT has beaten market expectations. EBITDA margins, though, have missed street estimates. Overall revenue growth has been led by both domestic and exports as well. Domestic sales were up 18% at 2,577 crores. Export sales is what's really boosted, up 43% year on year at 464 crores. Just look at the core numbers very quickly. Revenue up nearly 22% at 3096, beat on estimates. EBITDA up 10.14%. This was tad below, or I would say in line with estimates really. Margins at 19.3% versus 21.34%, so a bit of a downtick over there. Net profits, though, were up 12% at 588 crores. The estimate was 452 crores. And of course, there's an interim dividend of 18 rupees per share. They do say there is uncertainty in different regions globally, which leads to an overall subdued outlook. This might be a bit of a bummer, even though the numbers overall look good. They expect recovery in export demand and remain cautiously optimistic about demand going going ahead. So Cummins is one thing to watch out for as well. Those are my first top three.
Absolutely. All right. So my first stock is actually thumbs down. It's in the paint space, Kansai Nerolac. Okay, I must admit the rating, I was initially contemplating putting a different rating, but then in the context of what you've seen on Asian Paints, the commentary on the volumes going forward, this seems to be playing out for Kansai as well. The revenue is up or just about flat actually at 1,922, in line with the expectations. The EBITDA has declined about 3.5%, 3.7%. The margins have actually contracted, but less than anticipated. It was pegged at 11.5%, come in at 12.2%. The PAT number is actually significantly higher, but this is largely on account of an exceptional item. There was a sale of a land parcel to the extent of 629 crore rupees, and that has padded up the bottom line. The bottom line is coming at 681 crore rupees. If it wasn't for that, actually, it would have missed. What is Macquarie saying on Kansai Nerolac? They've maintained a neutral with a target price of 255. And what they're saying is that the margin was a beat. The chief executive officer is changing. What they're saying is that the decorative sales segment was down about 3 to 4% in the quarter, and it was actually better in terms of performance versus Asian Paints. The concern, however, is a weak performance in international subsidiaries. Now, why am I saying it's similar to Asian Paints? Because ultimately the problems are the same. The outlook on growth is going to be a concern for this company, as it is for the rest of the sector as well. Let's move to the thumbs ups. Skipper is a thumbs up. It's a very solid set of numbers that came through for this company. A 40+ increase in the top line, and the EBITDA margin has also expanded to the extent of 15 basis points, but it's still significant. The EBITDA has risen by as much as 44%, and a very solid number in terms of PAT growth, up as much as 76%, coming at 36 crore rupees. Don't be surprised if this stock gets a big thumbs up at the start in trade today. The third one is in a related space as well. It's in the transmission and distribution space. GE Vernova T&D, the numbers were good. Revenue increased as much as 28%, came in at 1,074 crore rupees. This is more or less actually in line. It's just marginally below the consensus estimates. The EBITDA is up very strong. In fact, it's risen as much as 86%. The margins have expanded quite considerably, coming in line with expectations at 16.7%. And what an expansion it is compared with 11.5% in the comparable quarter, and a strong growth in the PAT as well. That is coming at 143 crore rupees, marginally above estimates. But what you need to focus on is that the order backlog is at a record high. It is up 1.8x. And come in at 10,780 crore rupees. And in fact, 85% of the orders are coming in from domestic customers. The mix also on the revenue front is largely domestic, 78% compared with 22% for exports. And for the 9 months, the order intake is up as much as 1.75x at 7,871. So very strong numbers for both GE Vernova T&D and Skipper as well. Neeraj.
Interesting. Okay. So that's, well, a set of 6 stocks which could react. I have 3 more just very quickly before we move on to the next topics. You know, VRL Logistics seemed good because the revenues were okay, 12%. So nothing too dramatic and almost in line with estimates. But look at the margin performance. Margins at 20.2 versus 12.8. The estimated was 16. So they estimated an uptick, and it's come even better than estimated. And net profit at 59 crores, therefore, versus 13.7 crores. The estimates were 38 crores. This one could do really well. I mean, it could well have been the stock of the day if the revenue numbers were northwards of 20%. So revenue is a bit okay. Margin performance terrific. Similarly, Avalon Tech. This one came into focus about a couple of quarters back when the stock price really shot up. Now it's living up to its numbers, I think. Revenue is up 31% at 281 crores versus 2114. The estimates were 283, so in line. Net margins at 12.3 versus 7.7. Again, solid margin expansion. The estimates were 11.3. They've come in at 12.3. And net profit thereby at 23.9 versus estimated 19. Solid show by Avalon. I would suspect that the stock could do well. The one which will not do well is Sula Vineyards. That's the third one on my radar. And by the way, we could have chosen many others, right? There is some very good brokerage notes, etc. But Sula deserves a mention simply because now it's consistently disappointing. So revenues down, margins contract quite significantly out there for Sula, and net profit down 34%. I would suspect this and Q4 would be key quarters for wine tourism as well, and despite that, not quite doing well. I would suspect Sula Vineyards would see some correction. So these guys are my top 3.